प्रेजेंटेड बाय ईबिक्स कैश। हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the headlines tonight. Late selling drags the Sensex 554 points lower. Nifty logs its worst day so far in 2022, below 18,150. That's amid rising bond yields, oil prices, auto, IT, metal and pharma stocks drag. Stellar Q3 numbers for Bajaj Finance. Profit soars 85% on healthy net interest income. Net interest income up by 40%. Tata Motors to hike passenger vehicle prices from tomorrow. No impact on bookings till Jan 18. Nirmala Sitharaman slams UPA government over Antrix-Devas deal, says it's fraud against India and Supreme Court order is a proof of Congress's misuse of power. Later on the show, we get you a power-packed panel on what market expects from Budget 2022 and wish lists that investors have for Finance Minister Nirmala Sitharaman. Benchmark indices failed to hold on to intraday gains and slipped into the red by the close of the trading session. Late selling dragging the Sensex 554 points lower and the index stumbling below 61,000. Nifty too fell over 250 points from the day's high to post the worst day in nearly a month. Losses across sectors led by automobile shares, pulling headline indices lower. The broader markets underperformed benchmarks, with Nifty small cap snapping its 8-day rally to post the worst day since December 20th. Auto stocks reversed Monday's gains, with the Nifty Auto Index down 2%. Stocks like Maruti and Eicher among some of the top losers there. Other laggards included Tata Consumer, Ultratech and Grasim. Private banking stocks lent support, with all major private banking scrips in the green. Brent surges to the highest level in 7 years as possible supply disruption after attacks in the Mideast Gulf added to an already tight supply outlook. Since December 2021, Brent crude has gained over 24%. Supply concerns have risen this week after Yemen's Houthi group attacked the UAE. Goldman Sachs has also raised its Brent forecast through 22 and 23 and predicted oil at $100 per barrel in the third quarter. According to Goldman, robust fundamentals have reversed last year's price slump, but oil's rally poses a challenge for consuming nations and central banks as they try to stave off inflation. Following in the footsteps of market leader Maruti Suzuki, Tata Motors has announced a marginal hike in prices of its passenger vehicles, booked from tomorrow, the 19th of January onwards. The price hike works out to around 0.9% on an average, depending on the variant and model. In a press statement, the company also announced that in response to customer demands, it has decided to cut prices by 10,000 rupees on specific variants. The company says it's absorbing a significant portion of higher input costs, but the steep rise has compelled it to pass on some load to buyers. Signaling that there would be no compromise with the foreign shareholders of Devas Multimedia, despite arbitration awards that have gone against the government, Finance Minister Nirmala Sitharaman today said that a deal was a fraud committed on India. Blaming the Congress-led UPA government for the fraud, the Finance Minister said the Supreme Court upholding an Indian tribunal's verdict to wind up Devas Multimedia was a very comprehensive order. The strong rebuttal by India comes at a time when lawyers for Devas have threatened further action after securing favourable arbitration awards to seize an Indian government-owned apartment in Paris, as well as assets of the Airport Authority of India and Air India elsewhere. Take a look at what the Finance Minister had to say.
The Supreme Court, after hearing both the sides, gave its order yesterday, upheld the NCLT and NCLAT order for liquidating Devas. When Antrix entered into an agreement with Devas, and that itself became a controversy during the UPA government. Agreement was signed during UPA in 2005, and post the agreement, it took 6 full years for the UPA themselves to cancel the order in 2011. And even when they cancelled it, glimpses of what was completely wrong against national security, that it was a fraud upon the people of India, a fraud on the treasury of India, and a fraud against the country.
In other corporate news, supply chain company Delivery has received SEBI's go-ahead to raise over 7,400 crore rupees through an IPO. The share sale comprises fresh equity shares worth 5,000 crore rupees and an offer for sale component of 2,460 crore rupees by existing shareholders. The proceeds will be used for organic and inorganic growth initiatives. Reliance Retail Ventures, the retail unit of Reliance Industries, has acquired a 54% stake in Adverb Technologies for $132 million. India-based Adverb will continue to operate independently and will use fresh funds to set up one of the biggest robotic manufacturing facilities in Noida, as well as expand business overseas. Shares of Prestige Estates surged in trade today to hit a lifetime high as the realty firm reported an over two-fold jump in sales bookings for the quarter ended December. At 4,267 crore rupees, sales were up 111% year-on-year during the quarter. Big Bull Rakesh Jhunjhunwala-backed gaming and sports tech company Nazara Technologies will acquire a 55% stake in programmatic advertising and monetization company DataWorks. The transaction values DataWorks at around 225 crore rupees. Special. Today we're looking at what the street's expecting from the upcoming Union Budget 2022, which will be presented by the Finance Minister Nirmala Sitharaman in Parliament on the 1st of February. To discuss this, we have with us Andrew Holland, CEO of Endus Capital, Nilesh Shah, MD and CEO, Envision Capital, and Mahesh Patil, CIO, Aditya Birla Sun Life AMC. Great to have all of you together, such powerful voices to give us a real insight into what the street is expecting this time around. And I must say, with markets having been very upbeat at the start of the year, the question did come to mind. Is this a pre-budget rally? Even though I know for the most part, experts these days tend to dismiss any kind of lead-in, according to budget expectations. But just given the kind of momentum we continue to see, what can we expect this time around? Mahesh, let me start off with you.
Sure. No, so I think on the budget perspective, I think it's very difficult to say. But I think one thing is clear that we are coming out last year from the pandemic, and while the markets have rallied and corporate earnings growth has been fairly strong, but the underlying economy is still really not to its full potential, right? It's still struggling. I think consumption it has been weak. We see rural consumption getting impacted. And I think it's important, and this budget also is like 2 years away from the final elections, right? Election which are there. And so I think the government will do everything in its power to see that growth comes back, right, to its potential growth rate of around 6.5–7%, which what we should be looking at 2 years down the line. And to enable that, I think we clearly on the to spur demand, okay, which is still kind of weak. I think you'll see measures being taken towards that, especially the rural side of the economy, which has got impacted after the second wave of COVID. Right. I think you will see some support to that. And also to improve general consumer sentiments have also been a bit weak and tracking lower. So all in all, I think normally in the budget, we've seen a lot of impetus to investments, okay, for future capital investments, the infrastructure side. While that will continue, I think, which was there in the previous budget also, I think those efforts towards that will continue. But at the same time, I think the government is also trying to ready the fiscal deficit. Okay, after the pandemic, we've seen this year we'll have a fiscal deficit of around 6.8%. We're expecting that probably they would be comfortable around 6% for next year, because I think the government will slightly go slow on the whole fiscal consolidation path and ensure that the growth stimulus is there for the economy to really come back to its potential growth rate. So some boost to consumption. On infrastructure, there'll still be challenges because the government ability to fund that is going to be limited.
Right.
So I think we could see some infrastructure bonds, being. I think budget will probably pave a way for that. Right. There's a holding company which has been formed by the government, right, to look into the investments. So instead of on balance sheet, you could see some off balance sheet kind of funding being done, to spur the investments into the infrastructure side.
Okay. Andrew, let me bring you in on that point. As Mahesh also touched upon, while room for spending may be limited, they are expected to perhaps talk more about boosting capex across segments like infrastructure, which also will help to, whether it's infra, construction, roads, railway, also help to create employment and really get the economy going. Is that really what you're looking at in terms of where we may see a fillip, post the budget?
Yeah, so I mean, actually, expectations are probably high. I mean, the last budget was very good. So if she can just carry on from where she left off, that would be good news too. But I think it's right. I mean, urban consumption has been increasing, but rural consumption hasn't. So obviously, that's where I can see the government kind of focusing their attention, particularly as you've got some elections straight after the budget, local elections coming as well. So I can imagine that there'll be certain amount of stops towards generating consumption across the rural economy. So that's good news. I think the problem the government might face in terms of capex spending, which hasn't been as great as we would have hoped. It's obviously with bond yields and interest rates rising around the world, and obviously we would expect rates to rise here. That just increases the interest cost for the government. So it will put a little bit of a dampener. But maybe if they can just kickstart the economy a little bit more, get the animal instincts going of the private companies to get their capex going, then that would have a multiplier effect across many different industries, particularly those supplying materials and so forth. And I think the other areas which they've been working on and done a very good job is obviously on manufacturing. Maybe there can be some more incentives there for manufacturing in different industries and digitization. I mean, this whole digital kind of growth that India will see, maybe there'll be more focus towards that to continue for that to grow. So those are kind of basic things. I mean, obviously, listen, we've been saying for years now, we always want reduction in taxes, whether it's stock market taxes or personal taxes. If it came, it would be great for the market, but expectations are very low for that.
That seems to be the general consensus on taxes. Nilesh, what about you? Of course, the laundry list is very long in terms of sectors, particularly bruised sectors like services, travel, hospitality, that may, of course, want some kind of sops or acknowledgement from the government. But very often, some of that isn't always addressed in this one document. What's your biggest expectation from the budget this time round?
Well, honestly, I would probably kind of look at this budget as basically being a continuation of, where the finance minister had left off during the last budget. And I think during the last budget was way more growth oriented. And clearly, I think the economy has done relatively well over the course of last 1 year. Clearly, on the tax collection front, especially the GST side, there has been a huge amount of positive surprise. So to that extent, I think there will be a very high level of cushion to kind of plow that capital or the collections back into the economy. So I clearly believe that this budget would essentially be a reflection of what the finance minister, the prime minister said yesterday, that this is probably the best time to invest into India. And therefore, how do we further improve the investment climate in India? And I think the budget is probably the best platform to kind of continue to build on to that aspiration which the Prime Minister shared yesterday. And I clearly believe that's the way forward. In addition to the investment side, the capex side, I think two powerful themes which will be running through this budget, or which could potentially run through this budget, is basically increased digitization, which means that how does India increasingly digitize itself at a much faster pace? I clearly believe that's essentially one of the sources of growth. And that's the way of how we could make our growth a lot more inclusive. And second is decarbonization. That to me is going to be the second biggest factor, the second biggest theme, which is going to be there in the budget. So I think it's going to be a combination of investment, growth, digitization, and decarbonization. These four to me are going to be the pillars of the budget.
Andrew, what about healthcare? While we may see an overall expenditure increase by the government on that area, there are certain pockets of the market that stand to benefit. For instance, if we see further SOPs announced for segments like hospitals.
No, I think the government will continue to focus and spend money on the health sector. I mean, if COVID hasn't taught us something, then it would be pretty poor of us to kind of leave the sector untouched. So I would suspect that we'll continue to see more monies kind of expended towards the health sector. I mean, but we're all going to spend more money anyway going forward. So if we have the infrastructure and it's feasible for the hospitals to expand, then I think that will be great news for us all, right? I just want to touch on the crypto though, because I think it's an important point. In that I do feel that the government will probably make the right moves here. And whether it's a tax as an asset or not, I'm not really that worried. It's more about the missing out part, because we know globally what's happening with NFTs, what's going to happen with the meta, and to miss out of that whole development process, of which Indian people, I think, can be at the forefront of all of this, would be a big revenue earner for the government to kind of walk away from. So I think if you look at the bigger picture and just go away and say Bitcoin and buying and selling coins, we're all going to be doing something different in terms of how we buy things in the future, not just through Amazon or anything else. It could well be through the metaverse and other places, which are developing very, very quickly.
This is so interesting, and I think it's one of the few times that I'm hearing how perhaps crypto can evolve into an actual tangible asset that people consider, and not just a volatile investment bet. Since we are having a conversation with some of the best market minds, have to ask you, in terms of sectors that you feel will dominate in 2022 with or without a slowdown, even with easing liquidity, is it going to be deep cyclicals, export oriented, urban consumer, manufacturing? What would be your pick? Andrew, let me get your favorites first.
So I said it's more of a barbell approach, Dava. I mean, the telecom sector, digitization, 5G, 6G, all to do with the metaverse and everything, I think is going to play out, very strongly over the next 1 to 2 years. Within the banking sector, I'm probably, less bullish. I think there's a lot of disruption going on, not only in the private banks, but with obviously newcomers coming in as well. So I think it's going to be a struggle, to be honest, for the financial sector. So I'd rather kind of go more towards the insurance and asset management companies. That's probably where I think that the things will play out better. And in terms of the kind of local economy, obviously I've mentioned hotels and airlines, I think will do well. And within the autos, look for those auto part suppliers to the EV industry. They're cheap, and they've got a lot of catching up to do. So those are the kind of broad themes I would play at this point. I mean, again, defensive, more pharma, but I'd probably have IT and telecom there more than pharma at this stage.
All right, got it. That's a nice comprehensive list. Nilesh, what about you?
Clearly continue to kind of have a bottom-up approach. Look for companies which you believe are going to do extremely well across these 4 pockets, which is basically deleveraging-led capex. Clearly, that's going to be one big powerful area where I see continued sustained growth momentum. The second essentially is demand-led businesses, be it across urban or rural demand. The third is digitization. Clearly believe that a lot of especially consumer-led businesses are powered by technology and digitization and could sustain basically pretty strong growth going forward. And the last is around decarbonization, which broadly is around renewables, electric vehicles, and those kind of opportunities. So clearly like these four pockets, and I of course, these are pockets which have done well in 2021. And I believe that this will continue to be the course for 2022 and even beyond 2022.
Fantastic. Mahesh, closing comments from you.
Yeah, so just I think continuing, I think broader theme, I think if you look at for going forward would be domestic cyclical. I think India's recovery has still been lagging behind, but I think you should see that there are enough legs for economic recovery to really improve, even as global growth slows down a bit. So domestic cyclicals, so be it banking and financials, okay, where you will see credit growth pick up, credit costs will come down, valuations are reasonable, so that looks to be a good sector to do well. Real estate is another sector which has kind of come out, okay, after almost 6-7 years of a down cycle, and the conditions are really good in terms of interest rates. The affordability gap has come down. There's a lot of organized players coming into that space, so that sector could also have a good cycle for the next 2-3 years, and all the sectors linked to that should do well. And finally, I think while it's still early days in terms of revival of the private sector capex, but the way the government focused on manufacturing, the whole PLI schemes, the China Plus One policy, I think we are seeing some green shoots on the capex front. Companies are talking about it. So if I take a 2-3 year view, I think industrials, okay, could be the sector to watch out for, which again has been in the last 5-6 years, hasn't seen much of a growth. Whole investments to GDP has collapsed. I think we will see a revival of that going forward. So all in all, I would say that we are more positive on domestic recovery if we take a 2-3 year view, and I think that's where the growth could surprise in the coming years.
Catch the full interview on businesstoday.in and our YouTube channel. That's all we have time for on the show today. Thanks so much for watching.